Good afternoon, everybody. I'm Dan Hussey with Zaner Hedge, bringing you a strategy of the day update here for January 30th, 2024. Going to take a look at the row crop, specifically the corn and the beans today. We had quite an impressive reversal. In fact, a key reversal, a pretty big technical signal here from corn that maybe a bottom is in. The main question, of course, I think it leaves a lot of traders with is the why. Why today out of every day? We don't have a great reason. You don't have that eye-opening, jarring, head-turning headline that says, oh yeah, that's why we reversed. But what we do have is, I think, a culmination of events that has led to this moment. Okay, there's a history now over the last couple of weeks of a buildup of a potential short position in the fund category, that non-commercial, speculative side of the market that has ballooned into a very, very big, if not the biggest short that we've seen historically. It's certainly, I think, coming in around number 2 for corn, for example. So, okay, why turn? Well, tomorrow happens to be the end of the month. And while we don't know why the market might have turned exactly right now, we do know who could be turning the market, which is that fund, those shorts, starting to cover and come out of their positions. Well, speculators and funds are only beholden to their investors, and thus greed and profit taking is part of their trade plan. And one of the actions that they're going to do in a situation like this is probably take profits into the end of a calendar cycle, like the end of the month perhaps. So, okay, there's a little bit of a rationale and a reason why there could be some money flow, right, happening on a day like today. But other than that, right, there isn't much of a reason. It's not like there was a jarring export number, or China came in and said, hey, Uncle Sam, give us all the beans or corn. We didn't have that headline. We didn't have that reason to believe that is what's happening today. Although there could be things going on behind the scenes that we're unaware of. Seen reports of a lot of ships coming out of the Gulf Coast and heading towards China. Surprising number, in my opinion, when you consider all of those boats that supposedly have beans on them must have been loaded in the last couple of weeks, and yet we've had abysmal export numbers apparently. So it's things like that that make me go, this is all getting sneakily suspicious at a time when we have this very large speculative short that, if you've been in futures markets or any market long enough, that when those shorts get too big and they need to, any position gets too big and has to unwind, it's going to cause movement, directional movement in the marketplace. All right. So anyway, let's take a look now. Big key reversal on that daily chart for March corn. May corn, not a key reversal, but it was, interestingly enough, higher highs and higher lows, as was December corn. But that March corn did put in a key reversal. And what makes it a key reversal is we came off of switching. Sorry, here, let me switch over the charts here. When we came into today, we started off the day by actually going lower. And the market not only went lower, but went to a new contract low here on the day of 436 and a half. That actually was only one tick lower than the low of 436 and 3/4 back there on January 18th, but it was a new contract low. It traded there on, actually kind of low volume. To me, that is non-committal volume today at this new low in price. And we had a big volume day yesterday that brought us here. So in other words, we had a whole bunch of new sellers sucked into a market that have now effectively had a gotcha setup, like one of those head fake setups into a new low today that has reversed. The reversal was such that it overcame and overtook yesterday's high, and we closed above yesterday's high. This is, in terms of technicals, one of the more bullish, reversal signals. And given that it's happening with a lot of other things lining up behind it, seasonality, which we'll take at here and just look at in just a minute, along with that big fund short, I think there's a good reason to think that we've got the reversal now is going to get some legs, and we probably have a low in place on the charts in the corn, which would also lead you to believe maybe the beans as well. Wheat obviously had an outside day today in the Chicago March. We're not going to look at wheat and a higher high and higher low in the KC March. It looks bullish, it looks good. It looks constructive compared to what we were the last couple days. So you had the markets turning everywhere across the board. Good close. Let's take a look at some of those seasonals, and then we'll look at the smaller time frame. But 18-day moving average is the next level above. It was the level that we held as resistance last week around 450. It's coming in It's coming in today at 450 and a half, so we're almost up to it. Break above that would be, another trend reversal signal in the shorter time frame that we'll be looking at, and one that defines most of this trend down, right, with the exception of some periods where we did trade above and then held it as support before falling back below. It's generally been resistance the whole way down. So getting back above that 18-day would spark, I think, some interest from the bulls and maybe even more fun covering. Then you got this downward sloping trend line against the highs. That comes around 460. Above that, the 100-day, 55-day moving average at 470 and 3/4, 100-day at 483, and then that 200-day up at 508 and a half, where I really think, the market kind of needs to get back to. Let's take a look at that seasonal that I was talking about. And and actually, really, this is an analog now. We've been talking about a seasonal at this time of year that should bottom into and through the spring, right? It holds over multiple crop years. However, there's a more direct analog here now to 2014 and 2018 that we've been following and talking about with some clients in-house that is starting to play out, that I think is also a call for many producers to get ready to do some serious cash sells on the way back up. Because if this is anything like 14 and 18, this is the last good time to do sales in this rally into the spring planting season that we'll have for a couple crop seasons, in fact, before we get range bound and things. Ultimately, right, you start chasing profits with yield rather than price, which is we all know what price can do in that type of bumper crop economy. So anyway, December corn clearly taking a little bit of time as you look here on this seasonal or the analog, where in both 2018, which is the golden, and 2014, which is the red, we had bottomed in corn by, actually it was that WASDE report that came out a couple of weeks ago that caused the bottom and a catalyst for a capitulating bottom here. You can see in 2014 where it kind of came down, made a new low, then reversed, and we stayed below. But believe it or not, in 2018, we actually had a double bottom situation. And the lows for December and the lows for Jan were right there around that 345 area, a bit of a double bottom before we broke out and into the end of January and started February. We started that March higher, and ultimately for March corn that year, we had a rally from 345 up to 383. December corn, or excuse me, March corn of 2014 rallied from around the 414 area up to around 47. We're currently trading around 442. Does that mean we could have a rally towards $5? Maybe. I'm optimistic about that. You look at May here, you can see that between March and May, there was a little bit of more continuation higher as the March, expired and May took over into its end of life. So, between now and that May planting is when there is a seasonal rally that we're expecting. Why are we, about 2 weeks late right now? Well, interestingly enough, you look back into commitment of traders as well as, balance sheets. Wow, we really were in similar situations in 18 and 14. 14 was so similar that we're even coming off the contract highs in 2013. Right? So we sell off, we're finding that seasonal low into the end of the year. And interestingly enough, the commitment of traders in 14, we went into that really big short, built into that fund short into the Christmas timeframe. So kind of into December. And about 2 weeks later, we found that bottom. Well, guess when we found that really record short here in corn? Right, about 2 weeks ago here, just into and through that WASDE report. Yeah, it might have gotten a little bit bigger right now, but I think when you look back, because of that delayed week of how the commitments get reported, you'll end up seeing that this week we're really just, that process of covering those shorts is just beginning 2 weeks later than it kind of began in these other 2 years we looked at. That's a trend and another data point to watch for to confirm this bottom, that, hey, not only was it price finding a bottom and starting to, do these reversals and set higher, we're also seeing, the position in that commitment of traders, those funds start to unwind and there's real short covering. That's the confirmation, and seeing that position starting to erode there as we trade higher in price, coupled with, actually, you're going to want to see that, some rolls here and those and some calendar spreads do something too, but that's a whole nother video. But watching for what is this analog between 18 and 14 to potentially play out now over the next couple weeks, months really, maybe into the end of the year. Let's take a look quickly at that 4-hour chart. And actually, we probably aren't going to have time for corn today, but rest assured, beans are pretty much looking at the same, a very similar idea. We can go over that pretty quickly. Open gaps above us here on the March corn, 537. That seems like a long way off, but when you consider that the January corn has an open gap up around 503, it suddenly doesn't seem like in a similar level. It doesn't seem like that far away to try to get back up to some of these open gaps, in the near term. Now that we're starting to go above, previous highs, in the chart. All right, there isn't much else to say there about corn. I do think it's that December corn chart's pretty interesting on where we found a bottom. It's kind of equal legs down, but I do want to give beans here because they also had, I wouldn't call it a key reversal, but it certainly was off of a relative contract low, a seasonal low. So it was a significant reversal. Like it's an outside day higher, right? If nothing else. And it feeds into the credence that there's something that went on today that is sparking an event that is at least turning the heads and saying, okay, is there a reason to shift the focus now and think that things have, the trend has shifted and trend changed? Well, I think there's enough evidence to support that we've exited a period of price discovery lower. We found out where some bottom is or finding it, and now we need to find where the resistance is. 18-day moving average there on the March beans here at 1229. That 1230 area, get back above that. Look at this cluster of 200-day, 55-day, and 100-day moving average up here between 1320 and 1304. I think inevitably this chart is screaming for a rally back to test 13. We were above that level for so long. We're now below it. There's that open gap at 13. I mean, why does this not want to get back up to the test at least as resistance if the bears want to keep it going? If we're going down to $10, that's how it gets there. We go to 13 first and then roll over, in my humble opinion. Doesn't have to happen, but I mean, on a day like today, there's good reason to think some of these short-term technicals are now, the resistance areas you're looking at might start to break, and we might have a period, up to a bigger level. Well, that level screams at me right now at around 13 to be a magnet from where we are now to head back up in the near term. Similarly to our corn, the March beans and May beans, it doesn't really matter which one you look at. It's a very similar move higher. The May, had a little bit more of a move higher here. And by the way, the green is just the average between 14 and 18 to kind of give you an idea that they were so similar, a lockstep in how they moved. And seasonally, I think that, when you look at all the data, or when you look at the comparisons and you see all the data points that align, it's not just, a squiggly line on the chart at this point. It's like, yeah, the fundamentals were very similar. The way the participants in the market were behaving was similar. And that's where, we draw this conclusion that, hey, if we get a reversal signal around this time frame and the market starts to prove itself that this might be happening, there's a trade setup and there's the analysis and the reason and the rationale behind it. All right, so similarly to the corn, beans actually took their kind of time here bottoming. There was a bit of a double bottom range bound, until all of a sudden there wasn't come around the start of February. So really looking to see if the beans pick up right where they left off, or, the other analogs and turn right here on February 1st, like they have in years past, where arguably they were bear market rallies. We still saw a rally, in 2014 from 1259 up to, 1526 at one point. So there's hope for a major move. Even in 2018, when we were in the depths of what I thought was kind of a depression in the grain market and industry in terms of price, 971 still got a dollar rally up to 1070. So does that put us back towards 13 for just that humble dollar rally? Sure. Does it put us towards 1450 or 1550 if it gets, as bullish as it did back in 14 during this period with whatever shorts need to cover? Sure. But when you look at the charts, it still proved that this was the best selling opportunity right up in that spring planting period back on those charts as well. All right, real quick, that 1296 open gap here in the soybeans, that's kind of the next upside target. I feel like, we should be gunning for on a reversal like today. But we've seen, reversal setups like this happen and the market fade out and be head fakes in the past. So it's, if I didn't have the seasonals and the open the commitment to traders and all of these other things kind of aligning, I wouldn't be coming out and as I don't want to say confident, but it's certainly we wouldn't be We wouldn't be talking about this if there weren't all these other things going on, because this is still very much a 4-hour downtrend in the market. This reversal today, though, could be the start of something. So it's something to look for. If you are short, it's something to consider. If you're looking to get long, it's something for you to consider. So reach out to us over here at Zaner. You can always have a discussion about the markets and your needs and what you need to do. My number, 312-277-0110. You can find me on Twitter. You know where I already am on Facebook, or shoot me an email at dhussey@zaner.com. Have a great day, everybody. Thank you for tuning in. Give me a like, drop me some comments and questions. Happy to answer any questions you might have. With that being said, everybody, have a great day, and we'll be back with you as price action develops. Take care, everyone.